Do, 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 do. All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of GAR Capital. It is Friday, July 7th, 2023, 9 a.m. Eastern Standard Time. Thanks for joining me this morning and every morning. Let's go ahead and go around the horn. We are on Threads. So again, if you're one of our Instagram followers, I want a little more details in the market. Obviously, pictures can't really say much in terms of data. No one really reads the captions on the pictures. Follow us on Threads. We would love to have you on board. We've been talking about the markets this morning, some headlines and such. And again, if you want something a little more in-depth in terms of analysis, join our free live market blog on Discord. Just go to our site, www.gar.capital. Once you're there, you click on the free plan. That is the free market blog. There, I don't have any kind of restrictions or limitations on how many characters I could talk about, characters I can type into a box, whether it's Threads, whether it's Twitter, whether it's Instagram. So at least there we can have a little more of a deep dive into macroeconomics and stuff like that. So seeing this morning, we did get NFP, non-farm payroll report, that came in as a miss today. Less than expected. You would think the market would be cheering that, since yesterday ADP number was a beat, and it was a big beat, double the amount of the estimate. Jobs report came in as follows: 209,000 versus 225,000. The previous was 339,000. That was revised down to 306,000. The range 110 to 288,000. Unemployment rate is now at 3.6%. Wages 0.4% higher than the expected 0.3%. Wages year-over-year basis 4.4% versus a 4.2% expectation. So we got an initial pop this morning on that headline miss, on the number miss. You would think that the bulls would be excited that, okay, less people are working since you don't want more people working. And what happened? We're Flatsville. I mean, NASDAQ and S&P is pretty much slightly red flat. And that's really what we got right now. So again, we'll see at the open, but it just looks like a chop fest, unfortunately, after Thursday's drop. If we go ahead and expand this week, chop on Monday, nothing on Tuesday, dip and bounce back to flat on Wednesday, drop on Thursday, and so far flat on Friday. Pretty much the nightmare scenario for any kind of options traders with short-term expiry, because those premiums get hit. And we're going to go over all of that this afternoon when I do the weekly recap of our trades, what happened in the market. We'll preview the next week and such. So make sure to join us later this evening. I'll post that up. It's not going to be a live or anything. It's recorded. So again, turn on notifications so you don't miss anything. Around the horn, Russell is down 0.6%. Was slightly green earlier. 1853. Yields are starting to pop again. 4.09%. Crude oil just chopping around 71.70. It's flat as well. Gasoline futures $2.55. Gold is up 0.33% at 1921. Silver 22.93. Euro dollar is down. Is up 13 pips. Dollar yen is down about 70. 148.36. Pound dollar is up 26 pips. 127.66. Bitcoin futures are flat, well, down 0.66% to 30,310. 1873 for Ethereum, that's down 1.4%. The volatility index 1571, not exactly a ton of fear, up 1.75%. The dollar's down a quarter point. That should be a boon or actually help stocks. It's not, and that's kind of where we are today and yesterday, where really no rhyme or reason other than I could say was yields. But again, yields have been going up literally for the last 30 days, and June was fine in terms of price action. So I don't see what the market is seeing. I'm literally in real time when it comes to CNBC, Wall Street Journal, Reuters, just the narrative change, literally regardless of data points. It's just one of those things where, you know, they react and then we'll find an excuse. If it was up, oh, well, the jobs number was weaker than expected. And if it's down, well, the job number is weaker than expected. Just watching CNBC this morning, they were talking about, oh, wow, now the Fed has to hike in 25 basis points. That's been priced in for about 30 days now. So it could just be one of those things where, hey, you know, people just want to get out of some risk. That's completely fine. In terms of a technical standpoint on S&P, we haven't really broken anything. And that's pretty much the really frustrating part. You know, we're back to the late June highs before the pop into July. So the late June highs, we're basically still above that. all we've gone really given back is really July 1's move. And that's it. And we've kind of been pulled back. So all we did was make up July 1's move, pulled that back, and we're still above June highs. So here's June 30th. Well, they say we count June 30th. Was that the 1st? Let's see. Yeah, not July 1st. Let me check my calendar. Yeah, excuse me. July 1st was a Saturday. So June 30th. This is the big move from June 30th. That was a Friday. And all we did was make that back and just bounce back. And we're still above June 1 to June 29 levels. And you could see it pretty much is right here, this green line. And that's would be a great place of support. And it held. You could see it yesterday. But again, you're still kind of either going to retest this support and see what we get, or just going to get back and chop around this area as high as 44.52. The expectation that I was having was that with the NFP number, we'd get back to 44.68, which is back to Thursday morning, and then chop us around back to where we were this week on Monday, 44.80, 44.90 or so. So we're not getting that this morning, but with pre-market movers, understand that that changes so quickly. We've seen pre-market moves reverse rather quickly. So at least for the month of July, pre-market hasn't meant much. Analyst upgrades hasn't meant much because Tesla keeps getting upgraded, Meta keeps getting upgraded, Microsoft keeps getting upgraded. All of these upgrades, and it's just not making a difference. I mean, you're just not getting a buying mood out there. Now, again, we can blame the Fed, we can blame the yields, we can blame the dollar. It doesn't matter because it's all been working towards the market's favor when the market goes higher. So I don't think we're getting a rhyme or reason on why we're falling right now. If people want to say wages are too high, fair enough. But if that was the case, why did we pause last month? Oh, well, the Fed is going to keep raising. They're going to go really hard on raising. Well, then why did they pause last month? It just makes no sense. I think what you're getting is just a removal of risk into the summer, possibly, especially with a seasonally strong July. The first 2 weeks are usually very strong. So this is kind of different. This is a deviation from historical patterns. And again, once you do this enough, you really kind of focus on efficiency. You know what you're getting. The problem with efficiency and repetition, whether you're trading every day or lifting weights or doing what have you, is that any deviation from the norm or what you're used to creates emotion. So again, that's something I said yesterday regarding risk management and emotion. Risk management is the difference between oh well and oh shit. That's the real difference in risk management. Keep that on your desk. That'll be a great reminder. Risk management is the difference between oh well and oh shit. You don't want oh shits. You want a lot of oh wells. Well, not a lot of oh wells. You want a couple of oh wells. But back to looking at the discipline and seeing what we're expecting. If things don't come the way we expected, it's only natural that we'll have emotions about it because we're so efficient or so used to having things go in a certain way with patterns. This is how bull markets and bear markets really change. It's really human perception and human behavior. Has Nvidia really gained that much value really in the past 3 months, 2 months? Have they done anything fundamentally different with their business model? No, it's just the perception of it. The perception. I would say Meta has probably done a bit more. They just launched, obviously Threads, which is a Twitter competitor, and you would think that'd be enough to push the stock higher. Doesn't matter. Doesn't matter at all. Mara was up on a day where Bitcoin was red. There's some of those days you're just going to be like, why is it raining? And that's kind of what I see the market today. And again, we're still kind of holding on to that support on the NASDAQ as well. Very similar to the S&P. We're back above the June 29 highs, June 29th this year highs for the month. And looking at that, I mean, we're still on that trend line, very, very close to it. But again, all we're doing is just chopping and retesting and chopping really the past 3 days. I really despise holiday weeks for this reason. Chop is absolutely killer. So at least, thankfully, we don't have any holidays, at least until I think Memorial Day or maybe Labor Day. I want to say Labor Day in September because Memorial Day is in May. So that's wrong. So it would be September, would be Labor Day. So we have no holidays left in July. We have no holidays left in August, thankfully, to really kind of mess up the flow or kind of kill any kind of time premium when it comes to time. But you live and learn, and you continue on to keep grinding. So we can only trade what's in front of us. The goal is to see what moves we get. If we break down, you know, certain levels, I have no problem shorting. The problem is that when you're shorting in a bull market, it's extremely difficult. How do I know that? Because you can see this level here. We broke that support. So imagine if you had this support level the way I did, which is you're playing those June highs, pre-June 30th highs. And what happens? You break your alert. Yeah, we're going to go ahead and continue to fall. And what happens? We bounce back on nothing. No news, no nothing. And then you chop around for a bit. You bounce down a little bit. I mean, come back down a little bit, and you chop again. Enough to make your pull your hair out. But that's just the way it goes. You know, I don't curse the clouds when it rains. I just look for an umbrella. So again, all we're trying to do here is move forward, see what we can do. Not the best week so far, but anything could change during the session. So we're just going to continue moving forward, see what we can get. Hopefully the markets give us something to trade with. And if it doesn't, we'll just have to eat it and move forward. Good morning. Hey, Zoom Balloon from England. Silverstone, the races this week. Go Lewis, go Mercedes. But I'm pretty sure Max is going to win the race. But I would love to go to Silverstone and watch a F1 race. But England in the house. Montreal in the house. I've always wanted to visit Canada. I hear great things about Canada. I definitely have to visit. Being a Florida guy forever, I was born and raised in Miami, Florida. Snow wasn't something you see all the time. So if there's a lot of snow in Canada or certain areas of Canada, I'm definitely going to go and visit there. But yeah, I mean, looking at the most part here, guys, look, I have Meta 2, you have S&P just bouncing and just chop. And I think they call it chop because it feels like you're just getting like a blade cutting into you. When you're watching these premiums just chop around, the markets chop around, you're just like, what do you do? So all we can do is just, let's just wait on it. When you come, let me know. We'll go for supper. All right, JJ, cool. If you haven't, can you make sure to follow me on Instagram, my personal one, CEO Gar Capital, so we can chop it up. And I would definitely want to take the wife to Canada so we can check out Toronto, maybe some of the other cities too. Yes, this race is this weekend. Do you have any weekend plans? My weekend plans is just hang out with the family, relax at home. I definitely like to relax and kind of recharge for the next week coming up. I'm up pretty early every morning, right around 4 a.m. and such. I did not wake up that early this morning because NFP was at 8:30, so it really didn't matter. But yeah, I usually try to catch up on rest. An F1 race, I always catch the F1 race on Sunday. I like to watch the qualifying too. But we'll see. I mean, I'm still waiting for that movie Oppenheimer to come out. I definitely want to check that one out, the Chris Nolan movie. I'm Trade for Fun on Discord. Hey, Trade for Fun, JJ, cool. When Gus no trades into next week. Well, we don't know that. We still have 15 minutes until the open. Let's see this price action. I have seen crazier things doing this for 9 years professionally. Things you wouldn't dream of. Limit ups and limit downs, reversals. I've seen it all. So the market doesn't surprise me anymore. What surprises me is the excuses and kind of the justifications and the movings of the goalpost every time. Well, we can't have too many people employed. And if the unemployment goes up a little bit, well, now we're going to have a recession. People are not working. But you just said you don't want people working. I mean, what can you do? And now the NASDAQ is bouncing back. Fun. Double top on Netflix on the daily. Let's take a look at it. Some might say there may be a double top in S&P on the daily too. In terms of Netflix, let's go to the daily and take a look. I mean, double top could be. I mean, really, you're just trying to hold this channel here and use your 20-day moving average as kind of your barometer. Moving forward, Netflix is really just kind of flat. And all we did is just break above the 50% Fibonacci retracement level, but there's still a gap to fill here at 505.09. I think we get there on Netflix. The thing is that you have to go ahead and break above here 450 in order to get to that trek to 505. But let's say if we break 450, all things being equal, that's the target, 505.93 on Netflix. So that's where we are. Trade for Fun. Good old Trade for Fun. He has the best questions. Trade for Fun, I just want to give you a shout out. Thank you for all the questions on Discord. Some people may be a little too shy or they're just busy. So sometimes the questions you ask, other people have that question and they don't. So Trade for Fun and anyone on our Discord channel, guys, ask questions. That's why we're here. We want to help you. Our success is based on your success. So again, the more questions, the better. We want to make sure that you get things and don't be oh I don't want to ask the wrong question. There is no such thing as a wrong question. Just ask and we will answer. And if I don't know the answer, guys, I will do my damnedest to make sure I find the right answer for you. Raising interest rates is also contributing to inflation. The central bank model is not adjusted to today's reality. You're not wrong, my friend. I mean, we're seeing rates go up. But rates have been up the past 30 days. I mean, it's not like, yeah, we've had a mini spike, I guess, but you can see that we've had a really nice upward trend into the 10-year, and we posted this chart too on Twitter and on the Discord. This breakout here, this breakout of the downward trend. Now we have a gap to fill to the downside, but really since May 15th, we've been trekking higher. But if we bring up the same date, May 16th, where's the S&P? Up to. Oh, so now yields are the problem. Come on. Listen, guys, you don't need to go to Harvard economics to smell crap when you see it. It's just what it is. Listen, you want to blame interest rates? So be it. Okay, but we do know, at least from the data, that the Fed is accommodative somehow. If yields were just as bad, remember, yields were considering going up, and S&P was going up too, and yet we paused last month. So which is it? We should pause? We shouldn't pause. We should slow down, soft landing, yields are too high. I mean, again, pick your excuse. That's what we're getting. We're getting to that move the goalpost, and we'll see what happens. I think personally, watching this price action and Powell speaking and the FOMC and him speaking constantly, what that tells me is that they want the stock market to come down because that is deflationary. Well, not as inflationary, excuse me. And that's okay. No problem with that. But again, let's not just, throw stuff on a wall and see what sticks. It really doesn't have to do much with yield. Now, if we're talking about the velocity of the yield push higher, okay, fine. I can level with that. But again, yields have been going higher since May 15th. Take a look at the S&P since May 15th. Now all of a sudden it's decoupling. Fine. If that's the case, we'll play it that way too. But again, I just think that moving the goalpost really isn't smart. It just turns into justification of, any reason. And sometimes, guys, it just rains. That's all. You guys do a great job and always there covering for us. You personally sent me a reminder on the Discord to take action to sell my position. Who the hell does that, guard team? Well, we're looking out for you guys. That's what we do. And again, thank you, JJ, for being here. I'm extremely humbled that, you guys, we have 32 viewers. I got a DM the other day telling me that, it's a shame that you only have 32 viewers. Let's be honest. I'm not the most entertaining person on the planet. Sorry, I don't have that talent. But what I can do is inform you guys and let you guys make decisions to actually make you money. Sure, I can go ahead and show off a car and I could talk about, stuff that really doesn't matter. But what matters is to learn this business so you can get paid because, hey, I'm not going to live forever either. But I hope the legacy, at least, of Gar Capital down the line will continue. Maybe my future child will do a morning loan with your future child. Never know. It's nice to build legacies. My friend James is looking to reliable real-time news sources. What is the best way to get real-time market moving news? You have investing.com is a really nice app. CNBC app is good too. Wall Street Journal is extremely behind because they're a newspaper. You can follow us on Threads. You can follow us on Twitter. You can go into the Discord. Ask your friend if he wants to get the blog. We put all the headlines as well. If he doesn't want to use Discord, I think the best bet is to use Twitter and or Threads. Again, I don't know if they have the notifications bell. Still kind of messing with that app, even though I think it's extremely cool. But Twitter, again, you can turn on notification bell for like names like Live Squawk, News by Nick, Benzinga. You have my buddy Evan, which is Stock Market News on Twitter, one of my favorite follows. And then you have Financial Juice, which is a really great one. I recommend Financial Juice to everybody because it's free. And it's a really great site. So if your friend, Zumbalun, if your friend wants kind of like live news and you're really type A, I need to know what's going on, this is a pretty good place to start. Financialjuice.com. I'm not sponsored by them. I'm just big fans of them, is all. We're the lucky 32 viewers getting the top info. Yeah, and then I kind of see it as being like, an unsigned artist. I was very big into hip hop when I was younger. I still love hip hop. Huge Wu-Tang, Nas fan, Biggie fan, definitely New York. But again, they didn't start as, a multi-platinum selling artist. They started as humble beginnings, underground mixtapes. 50 Cent started with mixtapes. Dipset had mixtapes. And the thing I always got was that do it for the fans. Don't worry about those who aren't fans. I do it for the fans. I do it for the ones who really care. And that's why I like doing this every day, because it's a way to really engage with you guys real time and live. Let's see. Last question for me. UPS bounced off the 200-day moving average. Cool. Let's see it. All right. Yes, it did. It did bounce the 200-day moving average, and you got a gap to fill here at 193.61. Interesting on UPS. I'm going to see if they have some unusual options activity. Why am I saying that? Usually when it comes to labor disputes, and what they're having, I think it's the truck drivers, the strike. Usually before, God, I don't want to even assume the worst, but people know inside stuff. Let's be real. ETRN was an insider trade, and we caught it. Pfizer, that short, was an insider trade, and we caught it. Sometimes it's real time. DAL had incredible price action when we soared. I think how much was that? 400% on that, Nick? I think it was 250 or so.
What?
Dow last week. I forget.
Oh God.
Yeah, that was like 400%. Or is it? I may be wrong. I have to look back. There's so many.
I think it was. I recall like 270.
270. And again, sometimes you just need to get it right once. I think UPS is going to fill that gap, and the news that's going to happen to fill it is going to be a strike deal with the truck drivers when they make a new contract negotiation. I think that's when UPS fills that gap to 193. I'm going to keep an eye on UPS for any unusual activity. If there's not a big volume spike on some further out expiries, I won't touch it. But again, UPS, keep an eye on it. 193.55. And again, use the excuse of labor dispute settled. It's always the same. But again, above the 200-day and above the 20, UPS isn't bad. There is a nice gap to fill. Let's see. Let me give you your flowers. I'm a former Discord member and obtain a lot of knowledge from you. Because of you, I've adapted to 40%. I try to check in every morning. Thank you very much. That was very sweet. And I'm glad that we've helped you as much. I'm glad that we helped you throughout your trading career. And that's really important because it's the lessons that stick with you. You don't have to be in our Discord forever. Hell, I tell my employees too that the goal is not for you to work forever here. I want you guys to create your own and create your own businesses and your own services or what have you. Why? Because it's all about growth. I'm not going to be here forever, but legacy of others building to their own, that's what's really key. At the end of the day, how much money do you really need in the world? Again, I think personal growth is way more important than just chasing dollars, in my opinion. What levels am I looking at? Nvidia and Tesla. Tesla was an absolute chop show. And again, here's your grand week. A whole lot of nothing. That's what we've been getting. And of course, probably next week, it'll hit 300. Just like Meta, what we had last week's Meta calls, we were expecting to hit 300. We got 300 this week, pre-market yesterday. Great. So it's just been an absolute mess of terms of price action. Nvidia, at Tesla, break 285, we could talk. That's what we need to break. Nvidia had a gap to fill. That's filled. You need 431.66 for more upside, possibly to 440, which would be, I believe, the all-time highs. Amen. Cheers. What levels am I looking at? Oh, Joey. Joey's an old fan of ours as well. You just named some of my classic hip-hop. Utmost respect for you. Oh, yeah. Biggie, to me, is the greatest of all time. To me, one rapper, trust me, there's a lot of great rappers, obviously. But Notorious B.I.G., to me, number one. There was a Cannabis line from a great song. It was a beat song. Well, LL Cool J. I'm old. Bear with me, kids. Goes the greatest of all time, died on March 9th. That hit home, man, because he was, to me, the best. I still listen to Biggie to this day. To this day, I'll pop in Ready to Die and go, and no skips. That and Illmatic. Illmatic, there's no skips necessary. You could just play that song, play that album. It's the greatest album ever made. Nas, Illmatic. If you are younger than 35 and you want to listen to real hip-hop, listen to Nas, Illmatic. Front to back, it's perfection in every single aspect of hip-hop. To me, it's the opus, the masterpiece, the Mona Lisa of hip-hop albums. And only one feature, AZ, which is still a great song too. AZ is great. Have a great rest of your morning, guys. I will catch you guys later today for the recap. We'll go over the positions. We'll go over the week. We'll preview the next week. And we'll see you then. Cheers.